Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate filings into something you can actually understand. Today we're diving into a Form 8K. It sounds like something out of a sci-fi movie, but trust me, the financial twists and turns inside are even wilder. Get ready for a ride. In simple terms, a Form 8K is a report companies file with the Securities and Exchange Commission, or SEC, to announce major events that could affect their stock price. Think of it as a corporate bat signal alerting investors to important news. This one is from Anika Therapeutics, and it was filed because of an earning press release they issued, so let's see what they said in it. Here's the deal, this part of the form is basically saying, hey, here's a press release we put out about our financial results. Take a look. Now, press releases are carefully crafted to put the best possible spin on things, so we will try to give you our honest opinion. It includes results from the fourth quarter and the entire year that ended in December. The actual press release is attached as an exhibit. Let's scroll down to it. Right here we are at exhibit 99.1, the press release. Anika Therapeutics, just so you know, is a company that focuses on regenerative medicine. That means they make products to help repair and heal tissues. This press release is all about how they did financially in the last quarter of 2024 and for the whole year. Let's dig into the numbers and see what's really going on. Okay, let's talk revenue, the lifeblood of any company. For the fourth quarter, their product revenue was about $36.6 million. For the entire year, it was $148.4 million. Now, it's important to see how this compares to the past. They say that compared to 2023, there was a revenue decline, so they made less money than they did the previous year. A decline in revenue can be bad because it can mean that you are losing customers or that your products are not selling as well. Next up is gross profit. Gross profit is basically your revenue minus the direct costs of making your products. For the full year of 2024, Anika's gross profit was $84 in 2023, which was $92.9 million. This is less than what it was in 2023, which was $92.9 million, in 2023, which was $92.9 million. This decrease in gross profit could mean that the company's costs to produce the products are going up. This could be due to higher costs for raw materials or manufacturing. Operating expenses are what it costs to run the whole company. This includes things like research and development, sales and marketing, and general administration. For the full year, Anika's operating expenses were $99.4 million. That is less than 2023, so they are spending less money. If operating expenses are reduced significantly, it can be a red flag because it might mean they are cutting back on things like marketing or research, which can hurt the future. The most important metric is here. Let's talk about the bottom line, net loss. Net loss is what's left after you subtract all your expenses from your revenue. For the full year, Anika had a net loss of 25.5 million NZARs. That means they lost money. In 2023, they had net income, which means they made money. The decline is significant, and it's important to understand what's going on. They lost money because the revenue went down, and while they did cut operating expenses, it was not enough to counter the lost revenue and the decline in gross profit. One final thing to look at is cash and investments. This is how much liquid money the company has on hand. At the end of 2024, Anika had $43.7 million in cash and investments. That's less than the $64.7 million they had at the end of 2023. So they are running out of money. This is very important. The trend in this filling is very simple. They are making less, spending more, and they have less cash to operate. So let's take a step back and zoom out. This report paints a pretty clear picture. Anika Therapeutics had a tough year in 2024. Revenues are down, gross profit is down. They went from making money to losing money, and their cash reserves are shrinking. They say that they are focusing on improving their financial results in the future. But let's be real, the numbers don't lie. The main problem is that sales are down. It seems like whatever they are selling, nobody is buying. They need to cut down the spending a lot more or start making things people actually want. As of now, the direction of this company is not looking good. Thanks for watching. If you found this breakdown helpful, be sure to like, subscribe, and leave a comment below. What do you think Anika needs to do to turn things around? Let's discuss.